Hi, guys. Welcome to this week's episode of the podcast. It's really good to be back with you and really good to introduce to you today Pat, who's joining me from Total Property Group. I've known Pat for a few years or so. You'll know that I talk about Property Entrepreneur Program with Daniel Hill. Pat's on that same program. And we got speaking about crossover of what he does and what I do and how he's interested in what I'm doing, but importantly, how I'm interested in what Pat's doing. So I thought I'd bring him along and introduce him to you, so he could tell you a little bit more about what he's doing in property. And as ever, by listening to other people, you get ideas, you get inspiration, and things come about from it. So this week's episode is from or with Pat Harper. Thank you very much for joining me, Pat. It's really good to have you here. Perhaps you can start with a little bit of an introduction to yourself.
Great to be here, Martin, and thank you for the intro. My name's Pat Harper. I run Total Property Group, which is a Liverpool-based property sourcing and investment company. And we help busy professionals buy buy-to-let property portfolios and individual buy-to-lets hands-free. And we've done 100 plus purchases, which actually means we've done 100 plus refurbishments because every property we do actually needs some work doing. And a big part of what we do for our clients is de-risking. So it's de-risking the refurbs before completion. So our clients don't get caught with expensive mistakes.
Excellent. And just for clarity, when you talk about refurbishments, what's a typical kind of project consist of as a refurbishment? Because one of the things I'm keen that people understand is the phrase refurbishment has a big range, and nothing's wrong and nothing's right. But for context, where does that fit for you?
So, I mean, me personally, I've done refurbishments that probably as little as a couple of £1,000 up to say, I think the most we've done is around 40-ish. So basically we're going back to brick and putting everything brand new in. But for our clients, we like to keep things as low risk as possible. So we focus on light refurbishments for our clients. And the benefit of that for our clients is it keeps the risk level right down and it keeps the upfront cash to a minimum. And additionally, it means that we can get the tenants in faster because we're not waiting around for massive refurbishments to complete.
And this is in the Liverpool area, is it?
So our focus is on Liverpool, which obviously is a great place to invest at the moment.
Yeah, yeah. So I hear I'm obviously in Kent, but I do talk to a lot of people investing in the Liverpool area. I think something that came out from what Pat's just said there, if you didn't pick up on it, was lowering the risk, moving tenants in faster. I think, and I've said this in other podcasts, I think there are some people going way over the top with some of their refurbishments. They've got properties that look as though they're a higher quality than Buckingham Palace, and yet it's for me a lot of the time that's not appropriate. So interesting that you're saying the same. Keep them fairly straightforward, and if you once you've got tenants in there, you've got income coming back. So so that I guess now is the way you sell your services to your clients, is it that it's quick turnaround, low investment type stuff?
That's exactly it. So our clients are busy professionals in London or abroad, and they want to get their money into property. But the last thing they want to do is give themselves a second job. They've already got the demanding career or the business that takes up all the time, and they want to spend the spare time with family, friends, going traveling. But at the same time, they want to get the money in property because they know how lucrative that is. So our service, what that does for them is allows them to do that in a low risk manner.
Yes, yeah. And how are you finding these clients? How are you sourcing them?
A lot of our clients come from referrals. A lot of it is repeat custom as well.
Mm.
And then people just see me on social media and somehow end up on my website and come via that means as well.
Yeah, Yeah. Okay. So going backwards then, thinking there could be some people listening, thinking, oh, this might be an interesting model for me to investigate. How did you come to being a property investor yourself, to flipping yourself to a point where you were providing this service? What's the backstory here?
So I started off as a heating engineer and installing central heating for Liverpool City Council. And then I moved on to, because I loved engineering, I moved on to studying engineering at university. After that, moved into construction, managed projects, some big projects worth 250 million pounds in value, helped to manage them. And all this experience gave me a real good understanding of how buildings are put together and also how to manage tradespeople. But
Mm.
at the same time as I was doing these jobs, I was also slowly building my property portfolio in the background.
Yes. Yeah. And then so what caused the flip to start offering services for other people then?
So I helped my brother. So I helped my brother start to build his portfolio. And my brother is what I now know is my typical client. He's a busy business owner. He doesn't have time to do it himself. He didn't have the experience, no local contacts. And so I helped him build his portfolio. And I realized, there's loads of people out there just like my brother who I can really make a difference to and help them. And these people, they think property investment isn't for them because there's so many traps that they can fall into when they don't have that time to
Yeah.
make the investment a success.
Yes. Yeah. Okay. So yeah, it kind of fell into it by accident more than any kind of planned planned approach to a business.
I suppose
Uh,
that's right, yeah. And I suppose it was just a matter of, well, I've got this knowledge and this experience, and I've done it for myself. I've now done it for other people, and why not just expand that? And so we set up Total Property Group. It's going more than 5 years now,
yeah.
and as I mentioned before, we're helping clients from around the world now invest in property in Liverpool hands
In
free.
Yeah, excellent. So just thinking, you touched on it that your previous career, you were managing projects of 250 million pounds, which, you know, in that's obviously a project within a building that's worth, considerably more than that.
Yeah,
And now you're quite happy spending, up to 40,000 pounds on your own projects, and probably even less on behalf of some of your clients that you're working with. And I think, yeah, that's not dissimilar from me. My career didn't ever get me to projects as big as 250 million, because I always got involved with more specialist blue chip type clients, but I was doing multi-million pound projects. And now we were having a call right before, coming online. I'm managing a small refurbishment in my own, in a small block of flats I own, that's not even going to come to £10,000 at the end of the day. and
yeah.
and and in fact, in another one of my properties, I'm refurbishing a flat which I should get change out of £30,000 for. So it's quite interesting that both of us with experience of much bigger projects are both paring it back. And you touched on earlier on the risk side of things, because I think there are a lot of people doing far too much and taking on bigger risks than they appreciate they're taking on. I guess you'd agree with that, would you?
Yeah, I mean, obviously these projects, for example, the 250 that I mentioned. I mean, you're going into development territory there, and it's a completely different property investment strategy to simple buy-to-let property investing. And I think I'm not actually convinced that this economy that we're sat in at the moment is suited towards development properties. But what always seems to work is just simple buy-to-let property investing, and that's what I've always done. That's what we do for clients, and I don't think there's any market really where it hasn't really worked.
Ultimately, property is a time game anyway. So just being in the market is, I think, the important thing. There's a lot of people talk about cash flow to get out of your day job, and that's obviously where HMOs and some of the more specialist social housing kind of models come from. But ultimately, I think owning property is the thing. We both see and hear Dan Hill talk about that on a regular basis, and he's pretty much just saying just own property. And of course, from everyone's perspective, the quicker you can get tenants in, the quicker it's earning you something on on your investment. So and yeah, so obvious that there's so many people out there that want to benefit from property, but as you say, they've got other businesses, they're abroad, they've got other commitments, other things they want to be focusing on their time on. So you know, it's an excellent service you're offering. Assuming no one wanted to do it in Liverpool, what would be your top tips if they were thinking of doing it in their area?
Oh, that's a good question. So first of all, make sure it's actually an area which is suited for the investment strategy which they want to deploy. So, for example, if they did want simple buy-to-let property investing, for example, investing in terrace properties, renting out to long-term tenants, first of all, you want to make sure you're in a high yield area because if you're not, you're going to really struggle with cash flow. And even if you invest in buy-to-let property, invest in places like London, for example, you won't even get a 75% loan to value mortgage. Because so that means you have to put a lot more cash into the deal. So number one, make sure it's a high yielding area. And then if it is, make sure it's got good regeneration going on because the high yielding area means that you're going to get good monthly positive cash flow. And then the regeneration means that your property value is going to go up. And that's actually where you're going to make most of the money over the long term. So I'd say they're probably the two most important things that an area has to offer.
Yeah. Okay. Yeah, that makes sense to me. And then the refurbishments that you're carrying out, are you managing them yourself, or have you got a team working with you?
We've got a team.
Yeah.
So I'm heading up the project management side, but we've got guys on the ground. So what we offer for our clients is it's weekly project updates for our clients. So every week, we're showing them video walkthroughs, pictures, and providing a mini report to show them, the progress on the property. And then obviously then it comes to snagging. So the builder tells you they're complete. In that translates to we're 95% complete. So then we go in and snag it, and so we're doing all these things on behalf of the clients and keeping them updated on a weekly basis as we move forward.
Yeah. And are you using the same build team all the time, or are you tendering them out for competitive prices?
Yeah, that's a really good question. It's something which we are. There's been a bit of movement on recently. This in within the company. So we were using one build team. Previously, we were using a couple, and then we went to one, and we were basically probably their only our only client because we were giving them so much work. Um, but then I had a bit of a reflection, and I thought, you know what, this is probably not a great business decision. And it's probably not great for us, and it's probably not great for the builder neither. We probably both need multiple. They need more than one client, and we need more than one builder because it
Mm.
just de-risks from a business situation. So now we do have multiple builders, and in terms of pricing, we just know how much things cost because we've been doing it for so long. We just know. And obviously, yes, it does help to have multiple build teams because then it helps you get multiple sources and you can kind of sensor check. But yeah, it's just that experience that you get and you go, yeah, that's about right, that's fine. And it's about having, but what's the most important thing is getting a good builder. That is really important and quite hard to achieve. I think there's a real lack of good builders in this country at the moment.
So yeah, absolutely agree with you that I think you can't put all your eggs in one basket, and it's probably wrong to rely too heavily on a builder. I've had phases of having my own pet builder, and then for whatever reason they're not available when I need them, and you have to go off and find someone else. Whereas if you know several builders, you've got that chance to move, move the work around several different builders. But the other thing is, if you're doing the same kind of projects on a regular basis, you absolutely get to know the fair prices, and you get to a point where you don't have to competitively tender projects, and you've just got a gut feel. And I guess, you're the same as me. I can do that. I can look at builders' prices and tell you whether it's right or wrong, because it comes down to experience. And for anyone, that's worrying about whether builders are, the phrase they use is, ripping them off, then in the early days get some competitive prices. But as time goes on, as your investing goes on, you get to the point where trust counts for so much more. And as you say, a good builder that you can trust to deliver is worth so much more than saving a few hundred or even a few £1,000 at the end of the day.
That's so true. It's so
Because
true.
it ultimately it kicks back on you through your end client, who have got, who are unhappy with the service you've provided, because you're providing the one-stop shop type service.
Very true, Martin. And also related to this, there can be a temptation to go for the cheaper quote. And I'll tell you one story from my part when I was tempted to do that and I went for it. So the quote came in quite a lot cheaper. And I did all my due diligence on this builder, looked up on Companies House, visited a live refurb, even knew someone who had had work done from them before. Although I didn't speak to them direct, but I knew they had work done. Maybe that's where I went wrong. Anyway, when we start a new builder off, we always start them on a low value job, because obviously there's less moving parts, there's less that can go wrong. And we started them off, and we did a site visit a few days later, and it was just obvious straight away that they were delayed straight away. That the quality of workmanship was just, you could just see where it was going. So we decided to call it a day and say, look, can we just pay you for what you've done, please? And call it a day. We draw a line underneath it. And he got quite nasty, actually. And I get it, but end of the day, we just needed to move on from a business perspective. So we had to change the key safe code. And we did pay him for what he was done. And, we said goodbye. We tried to keep it as amicable as possible. But I think the lesson learned there is you don't really know a builder 100% until you've used them.
Absolutely, totally resonate with that. And even if someone else has had a perfect service from them and a perfect relationship from them, doesn't necessarily mean that it's going to translate to yourself. And when I worked for building contractors, we used to say we're only as good as our last mess up. And we would have repeat work from repeat clients, and then suddenly we would just have that bogey job where things went wrong for us for whatever reason. Our manager went off sick, or we bought something wrongly, or we got messed around by one of our specialist tradesmen. And trying to recover from that was hard work. And some clients would say, we're not going to give you any more work, even though you've worked for us for the last 5 years and you've done all of these really successful projects. We've reached the end of the line because you're clearly infallible, you're clearly fallible, and we can't afford to have that risk again. But kudos for biting the bullet, really, and moving on, because too many people don't. It's very tempting to kind of battle on, but I think you can battle on a certain amount of shortcomings with a builder, but quality isn't going to be one of those. If they can't get the quality right, battling on with them's generally not going to improve it. If they're if they've got some other problems, you can often help them out or guide them along. If they're a bit disorganized, you can just take a bit more of control of their management. But quality is not something you can easily get them to improve if their mindset's not right.
You just have to pay for it twice then, won't you? You have to get someone else in to fix it all again.
Yeah,
So,
yeah,
yeah, it's kind of cutting your losses at that stage.
that's it. Because it's the quality that shows. It's quality I would pay for, really, because it's quality that reflects back in the rent, and the way the tenants look after the property later on. If it looks like it's been thrown together, then everyone's expectations on the rent is just that little bit lower, and ultimately that's the long term investment, and that it kicks back and and reflects it in what we're doing.
That's right,
Yeah,
yeah. So rent's lower. It's harder to attract the best quality tenants. When they do move in, they have loads of issues, and you keep getting phone calls. And then it's not hands-free anymore.
no,
So it destroys the model basically.
yes, yeah, and listening to the podcast would hear me have said before. I think quality is the first metric, and the second metric really is how quickly builders can turn them round for us, and then the third metric becomes cost. Although cost is important, we don't want to be cutting the cost and find that the quality's down, because, as you say, the worst thing is that you've got shower leaks and things that don't work later on when you've got a tenant living in the property. You're now paying a premium for a handyman to go and do the work because they've got to put down dust sheets, they've got to repair things in a way that fits around the tenants living there. And not only do you pay twice, you probably pay three times, because there's a premium in repairing anything when there's a tenant living in it. And now you've got a disgruntled tenant who's got one up on you in some respects, which isn't where we want to be.
No, not at all. But I like that analogy, almost like a pyramid shape. So you're saying quality, time, cost. Yeah, I like that and
Yeah,
makes a lot of sense to me.
yeah, good. And are you managing the projects sorry, that you managing the properties for these clients afterwards, or do they have their own letting agents?
So we work closely with a local managing agent who look
Yeah,
after my portfolio and my client's portfolio, but we still oversee that process. So we make sure the property's compliant, ready to let. When the lettings team find three or four different suitable tenants for the property, we advise on who we would go for if it was ours. So we're still with the client throughout the process from start to finish.
yes, yeah, but outsourcing that bit. Yeah, so principally sourcing and managing the refurbishment, and then a little bit more hands free after that. But of course, it's in the agent's interest to look after you. But if you're bringing them regular new clients and they're looking after your portfolio as well, so
That's
that's
it.
that's how everything works. How long do you think Liverpool is the place to invest for then? Is it I have to confess I've only ever been to Liverpool once, and it was a flying visit to speak at a meeting there and come away again. So what's Liverpool like as a city?
Well, you might think I'm biased, but I honestly think it's the best place to invest, potentially in the whole world right now. We've got clients that come from Malaysia, Dubai, Singapore, obviously lots of people in London. But the reason why someone in Dubai or Singapore would want to invest in Liverpool, where they could invest anywhere in the world, right? Well, there's three main reasons. The first is the yields. So even as Zoopla says, Liverpool's got the highest gross yields out of all the UK major cities. And for investors, that's really important because it maximizes their monthly cash flow. And then secondly, there's a huge amount of regeneration going on in the city. So it's often reported to be between 11 and 14 billion pounds. And I think it's going to be like a brand new city in a few years' time. And while that's again great for property investors, is because regeneration helps prices to go up. And then finally, we've got very affordable houses at the moment in the city still. So I was just looking at the ONS data, and compared to Great Britain, Liverpool prices are 45% cheaper. but it's not with all the regeneration going on. It's unlikely for that gap to stay so big forever, in my opinion. So I think when you put all them three things together, yields, major regeneration, and affordability, you can see why investors are drawn to Liverpool.
Yeah. And just as an idea, where doesn't it, what's the starting pot for a property in Liverpool? How much would an investor need?
So when you're buying with mortgages, we're advising clients that currently that they need between 55,000 and 70,000 pounds.
Okay.
And that is your all-in cash figure. So that covers your mortgage deposit, any buying costs, including tax, light refurbishment, everything's included within that figure.
So someone listening here down in the southeast that £50,000 is hard to find much for £50,000 in the southeast. It is possible where I invest. It is possible, but you have to be right down in the southeast corner of Kent in Dover to kind of make those figures work. And even then, we'd only get a flat at that kind of that we might get a small house, but it would be a flat. So for anyone listening that's got a pot to get going, but not necessarily a large pot to invest in the southern part of the country, it does definitely sound as though Liverpool may be a place to look at. And certainly, I'm talking to a lot of investors that are interested in Liverpool and refurbishing the properties in and around Liverpool. So I've seen, to some extent, I've seen it drift up the country because when I started working with investors now, I don't know, 12, 14 years ago or so, a lot of them were in Birmingham. And then they ended, a lot of them ended up in Manchester, and now there's a lot of them in Liverpool. Although I do seem to be finding a lot of people in Nottingham as well at the moment. So that's perhaps an indication, um, very roughly, as to where people are going. But where do you think the property market's going in the UK generally? What's your thoughts on property investing and Renters' Rights Act and things like that?
Yeah, so as you say, there is a lot going on in the property market at the moment. Um, as you say, Renters' Right Acts, that's come in. But I don't think it's going to affect the typical serious investor that much because the serious investors have got all the ducks are in the row already, got all the paperwork in place, and got a good tenant in their property. So I don't think it's going to affect them. I think it's going to affect more the accidental landlord more. So, and if they don't do all their admin properly, I think they're going to end up in a bit of trouble. But in terms of where the property market is going, I mean, I don't pretend to know exactly. I can't predict the future, and anyone that tells you that they can, I think, is kidding themselves. You see a lot of gurus telling you this is going to happen and this is going to happen, and it never seems to do. That it never seems to actually happen until it does, because everything's going to happen eventually in the property
Yeah.
market. But I mean, some people talk about the 18-year property cycle, and if it does play out like the 18 years, then we're definitely due a boom soon. But is that going to happen? Maybe, maybe not. But what I do believe is I think property has always been a lucrative asset class in this country, because of the core mechanics of why has always been lucrative haven't changed. So we're on an island, land is finite, the UK population is growing, and people always need somewhere to live. And I was looking at the ONS stats again, and UK population is like 69.3 million, and it grew 755,000 in a year, but we only built 208,000 houses. So you can see there's lots of people and not many places for them to live. And when you have low supply and high demand, then obviously that helps property prices to go up and also rents to go up. But as I mentioned, property prices will do whatever they're going to do, and it's so hard to predict. But what we can control is our monthly cash flow. And that's where, as I mentioned, it's really important to invest in properties that are going to give you that positive cash flow on a monthly basis. So it's invest in areas like Liverpool who have really good yields.
Excellent. So now you've excited everyone about investing in Liverpool. What's the best way of people getting hold of you?
Yeah, so my website is probably the best place. So my website is totalpropertygroup.co.uk, or you can find me on all the social platforms at Pat J Harper. Connect, send me a message if you like, and we'll have a chat. But yeah, they're probably the best two places that I can be found.
There we go. So great. Thank you very much for that. I will add that into the show notes as well if you didn't manage to take that down, if you're listening in the car or something like that. But wanted to finish by saying thank you very much to Pat for joining me. Hopefully, to sow some seeds as to where you might be able to go with your property investing business. Maybe you're thinking, I don't want all of this hassle of refurbishing my own properties. I just want to contact Pat and invest in Liverpool. And to be honest, Pat, you've got me wanting to come and see Liverpool. I really do need to make an effort to get up to see Liverpool properly. So yeah, if nothing else, you've got a tourist
Well, you're
interested.
very welcome. You're very welcome, Martin, anytime. And we do actually offer Liverpool tour days, whereby we jump in a car or a van, depending on how many people there are, and we look around all the regeneration projects, and we look at some live refurbishments. We look at the good streets. We look at bad streets that we want to avoid. It's a very informative day. It's a great day.
Excellent. I always recommend those kinds of days to any investors. That's how I got started in the first place, really, because I knew construction, but I didn't know so much about property investing. So I was in those minibus tours of various places, looking at multiple properties. And for anyone who's relatively new, take Pat up on that opportunity. You never know who you might meet, what you might learn, and who knows, you might fall in love with Liverpool and be investing up there with Pats. So yeah, thank you very much for joining me. It's really good to be speaking to you, and thanks to all of the listeners for joining me. I'll catch up with you again on another podcast very soon.